Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, now let's take a look at as usual on the gold market. Well guys, as we have said millions of times already and speak about it within the recent couple of months, as you can see, we said that this rally probably will be doomed because as technically as fundamentally gold has no support and has no real reason for any upside action right now and for any reversal, because technically market, yes, this retracement was logical because market has completed a long-term ABCD pattern, but at the same time market hasn't completed the monthly grabber that suggests the clearing out of the 1180s, and potentially market also have ultimate very rare pattern that causes volatility breakout that suggests moving even to the 1050 area. Fundamentally, we do not see any purchases on the markets, and we see improvement in the economy. We see anemic inflation, and recent comments from the Fed just has confirmed this. That Fed has changed the assessment of the labor market in a more positive tone. It has closed the quantitative easing program that decreased the chance on inflation. And in general, the inflation by itself, by the recent data, shows anemic numbers. In fact, this absolutely destroy any foundation for the gold appreciation. And recent comments, as you can see, has led to the plunge down. Also, Asian traders tells about the significant drop in the physical demand in Asia, and the premiums on the China market has decreased to the $1.5 per troy ounce. This is the lowest premiums, because the largest premiums, the high premium stands approximately at the $6 per ounce. So this just indicates the decreasing of the interest to the gold market. The SPDR fund has reported on the new drop in the storages, and the storages of the SPDR fund has reached as low as the 6-year lowest level of the gold in the storages. That's also point on the anemic demand on the gold market. More and more analysis has started to talk about the reaching of the 1180 lows, and I will tell you guys that the 1180s will become the clue to the long-term perspective, because if we will get the breaking through the 1180s and holding of the market below these lows, this will lead to the panic sell-off and could make real the reaching of our ultimate target 1050. Although we do not totally believe that this will happen, because this really currently it seems a bit not really impossible, but some outstanding level for the gold market. It's very difficult to believe that market really could hit the 1050. But this really could happen. Either scenario is if market will show just wash and rinse of the 1180s and drop out and bounce up significantly. This could lead to the significant retracement to the levels above 1350 areas. So that could be a rally for $200-250 per ounce. That's why this is really the big stake around the 1180s. What factors could support the gold market in the nearest term perspective? First of all, I mean the surprising moments, not for example some fundamental data. We know that fundamental data could impact on the markets. For example, today's gross domestic product release, non-farm payrolls on the next week also could make impact. But these factors are expectable, so we know the data when it will be released, we know what to expect, and so on. What data could make unexpected impact on the gold? First of all, this is the political tensions. And guys, as I stand in Russia, I could tell you that if you in general the tracking the recent relation between the Russia and the European Union and the West in general, you could see that tensions has increased mostly started in the Milan meeting when the Putin absolutely I could say Russia is not agree for any driving back in the questions of the Ukraine, and in general the confrontation, some tensions become tougher between the Russia and the West. Also, you probably has heard the Putin speech in the Valdai Forum. In general, all these moments point that in the recent time situation hardly will get any relief, and this could support gold market if these tensions will become stronger and stronger. That's the first moment. Second moment is maybe surprising. That's the if you know the referendum in Switzerland on the purchasing and increasing of the gold reserves. By assessment of the analysis, Switzerland could purchase approximately 1,500 tons of the gold. That's really a significant demand, because the medium demand of the gold, annual gold demand stands approximately the 5,000-6,000 tons, and the Switzerland will purchase maybe 1.5 thousand tons of the gold. That will be significant, 30% of the yearly annual gold demand. Maybe this will not happen right in the moment, and definitely this probably will not happen right immediately. But in general, this gradual and lasting demand from the Switzerland could support the gold market. And that's two major factors that could become positive for the gold market in the short-term perspective, and that's why we do not denied the possible rebound of the gold market from the 1180s. We treat it as the possible if we will get the combination of the supportive factors, because fundamental factors hardly will change anytime soon. This is a bit more gradual and more the factors that could be forecasted and anticipated, because this is the fundamental economical situation. While geopolitical and some political issues, the referendum, some sort of the such events as the referendum on the purchasing of the gold in the Switzerland, they are a bit surprising, and they are really could support the gold market around 1180s. Fundamentally, we still do not see currently any reasons for rebound of the gold. So as you can see, the situation is very sophisticated and really tough in the medium-term perspective, but in the short term, it's really very big chances that market will reach 1180s and will complete our medium-term target, our medium-term target. After that, we will think what to do next.